Hi, everyone. Thanks for joining us today. So we have Milena with us. She heads investor relations and corporate development at Validus. Today, she'll be sharing her take and insights on fintech investment opportunities for family offices, specifically in alternative lending, how private debt exposure might be gained from fintech platforms like Validus, as well as the risk, rewards, and investor protection that the Validus platform offers. So alternative lending, or P2P lending, and as it's more commonly known as, is a relatively new asset class, particularly in the region we're in, so Southeast Asia. And in the last few years, it's a fast-growing industry that has seen a lot of investors come on board. And specifically, we've witnessed in the last few months a significant interest amongst high net worth individuals, as well as institutional lenders, including family offices. So we'll get right into it, starting with questions. Milena, so can you share with us how the P2P lending model works and how family offices can gain private debt exposure through fintech platforms?
Sure. So the P2P lending model aims to bridge the cash flow needs of borrowers, in our case SMEs, with capital from investors who might have liquidity that they're looking to deploy. So in our case at Validus, this deployment is really different from your typical fixed income model, where you might assume that your capital will be locked in for a long period of time in bonds, for example, or where you'll really have to play the markets by monitoring volatility and macro movements as you would with equities. SME lending is a form of private debt, but in our case, you're not doing your due diligence on every single deal, unless, of course, you want to. Our platform provides investors with the opportunity to passively deploy larger amounts of capital into a liquid investment that still manages to deliver returns that are a bit higher than what you would earn elsewhere. At the same time, you can achieve diversification into a range of both SMEs, sectors, and trade financing products that might match your specific risk appetite. So because our business model focuses on trade financing products, where our borrowers are originated through our corporate partners, which include mid to large corporates for whom they're delivering goods or services, we are able to use more alternative and performance-based data when we underwrite the SMEs. And these insights often go beyond their financial statements, which don't really give a complete picture of their present performance. And finally, SMEs, being private companies, are often less severely impacted by market movements. So we've seen, a lot of investors turn to this as an opportunity, especially during these times.
Okay, thanks for sharing that with us and creating a baseline for everyone to get a bit of context there. So I guess because we're talking very specifically to family offices today, how does P2P lending then fit in I wouldn't say typical, but how would it fit in a family office portfolio, for example?
Sure. So I think a family office with more of a broad mandate might be quite evenly spread, typically across fixed income, public equities, real assets, and private investments. And alternatives might only make up maybe 10 to 15% of their portfolio. Typically, alternatives are very liquid and scalable, and that really fits the bill for P2P lending, which is actually scalable in quite a sustainable way because you're able to gain diversification to various companies and products and sectors, as I mentioned. I think most other buckets for a family office won't have that same level of liquidity which P2P lending offers. So while we'll permit deployment of capital so that your funds aren't just sitting idle, we do still allow family offices to maintain some flexibility around cash.
Okay, thanks for that. So I guess that directly leads to the next question in terms of family offices can access this asset class through other options as well, through other direct lending opportunities. So what are the benefits in investing in SME private credit through a fintech platform as opposed to investing through direct lending opportunities with other sources?
Sure. So I think the biggest advantage is really simplicity. It's very quick to onboard, and you can deploy capital as and when you wish and monitor your investments online or on mobile app even. We manage from Validus' side all of the origination, assessment, and communications with the SME borrower. So as an investor or someone who's managing the funds of many investors, you're gaining access to this asset class without much active involvement or analysis required. even though if you would like, the information is available for you at any time. Additionally, we do have functions where you can actually select your investment preferences, including product exposures, borrower exposures, for example, and you can actually automate the deployment of your capital in a controlled manner. And I think, lastly, we don't charge fees to gain access to the platform, and we don't have any onboarding costs. So the structure is quite simple to just get started, even if you'd like to, dip your feet into this asset class.
Okay. So I suppose in summary, really what investing through a fintech platform offers versus other channels would be that there's a lot more transparency as well, a lot more, it's as much as the family office wants to have in terms of involvement and also reporting. So that's all big benefits there too. So moving on, I think this is probably the most important part as well. So what are the risks involved with fintech lending, especially with validators, I suppose?
Sure. So, I think ultimately it's actually two sides of the same coin because we are actually doing all of the credit assessment and analysis in-house. It allows investors or family offices to participate passively, but at the same time, you'll have to get comfortable with the fact that we don't have an independent credit rating agency. And ultimately, there are always operational risks. At the same time, we are focused on supply chain financing, which is tied to actual delivery of work. And so that does serve as a risk mitigation mechanism. And, secondly, we also do try to put repayment ring fencing mechanisms in place, which help to transfer some of the supplier risk to the buyer. But, as with any investment, your capital will always be at risk. And even SME lending is still subject to some degree of volatility that's driven by the market conditions. But I think in a way, we are still largely shielded from that impact because we are focusing on the private sector. And I guess lastly, another concern that we get often is currency risk. We actually lend in local currency to local SMEs, and we don't finance cross-border trade at present. So that's also largely excluded from the business model.
Well, that said, Validators is also in a few countries, few markets across Southeast Asia at the moment. So if anyone is interested in finding out more about where we also operate in, feel free to get in touch as well to find out more about those markets. So specifically, we operate in Indonesia right now, Vietnam, as well as Thailand, that's going live very soon, early next year. So Milena, you mentioned risk mitigation mechanisms that we have in place. So could you elaborate a little bit more about that? What are the risk mitigation strategies, for example, that Validators employs?
Sure. So I guess, when we are assessing an SME, what we do is that we like to create more of a 360-degree view on him. So for example, we won't just be taking your traditional financial statements or your bank statements, which are really static data. We actually aggregate data from various sources driven by our partnerships. So whether it's the invoicing tool that an SME is using, the accounting platform that he's logging into monthly and updating, or the corporate that he is actually a supplier of, we aggregate all of this various data and use our in-house algorithms to assess him on this holistic pool of information, which a bank often can't do because they'll only rely on physical statements, assets, or company size, which is only a really small subset of a complete analysis. And so I think, by leveraging this strategy, we consistently boost our risk assessment capabilities.
Yeah, I think now that we've touched about FinTech platform and what the risk strategies we employ are, perhaps let's go a bit broader there. So how has P2P lending in Southeast Asia performed recently? Can you share a bit?
So, while I can't speak for other platforms directly, just to be fully transparent, we were affected by COVID. I think especially at Validus, because as I mentioned, our financing is tied to actual project delivery for large corporates. Where work had stopped, we did see a slowdown. But I think ultimately that's something that we are comfortable with, as during this sort of credit cycle, we want to focus on maintaining measured lending in a policy-driven way, which doesn't take exceptions just to sustain high volumes. And I guess as an investor, that means that you would have seen a slowdown in opportunities in some respect. But I think we've shifted our focus to rather, implementing better processes that help us to create a better investing environment for, our investors and to ensure the quality of the deals that we do bring.
Also, I was saying that with every economy moving out of post-COVID now, slowly transitioning out of that, we also expect to see an increase in SME financing demand as well from businesses looking for. So there's quite a big growing opportunity as well in the coming months. So we all know that, of course, no business is created equally. So especially with P2P lending platforms, we're all not created equally. So what should investors and specifically family offices look out for?
Sure. So I think, from my perspective, one of the biggest things is the origination strategy. Ultimately, you're looking for a platform that provides ease of access, but also to quality opportunities. And I think that quality is actually driven by your sourcing strategy. So at Validus, we originate through partnerships, as I keep repeating, but rather than on a one-to-one basis, we feel that we'll have the comfort of having data on the SME that allows us to lend to him comfortably. And that being said, we don't just target bank-rejected SMEs, which is what people might often mistake this for. I think our market segment does receive bank loans, but not to the extent that they might require. Maybe because they don't have hard collateral to put up with the bank. But through data, we're able to kind of gain some visibility on his real-time cash flows. And that allows us to provide him with either a top-up or a short-term loan, where his bank loans may be longer in tenure and maybe larger in size. So I think, one more thing to look out for is just the credibility of the platform in general. I think when you look at other markets that are a bit more mature than Singapore, maybe China, for example, we saw a lot of platforms go bust in a short period of time. And there's always this risk in any market where there are, the intricacies of regulations and local know-how come into play. And I think that's where we do pride ourselves in our management team, which is made up of a lot of people with 15 to 30 years of experience, specifically in SME lending and financial services. And so they've seen credit cycles, they know the local markets well. And when conditions like COVID hit, for example, they're well equipped to know how to handle it and how to react. And I think our investors at an equity level also include some names like Vertex Ventures, Adventures, which is the CBC of Siam Cement Group, and FMO, which is a AAA rated Dutch DFI. And I think, as a result, we are held to a very high standard of operational soundness and regulatory compliance. And that's something that's pretty important to look out for in this environment.
Thanks for sharing that. So I definitely do get a few initial reactions when we start talking about when I start introducing Validus, that also do you guys lend specifically to businesses that can't get financing from banks? And that's really one of the view that we really like to change in terms of saying that we don't actually necessarily finance those businesses. We're in the business of also specifically doing growth financing. So financing viable businesses to help them grow faster, quicker, and better as well. So on that note, too, there are quite a number of P2P lending platforms, especially with Singapore being a strategic financial hub. So a lot of P2P lenders are setting up shop here as their headquarters as well, much like what we have done. So what does Validus do differently from the other platforms in the market?
Sure. I guess I've covered this a little bit before, but just to kind of sum it up, we are really partnership and data driven, which gives us a different view on the SME than other platforms might have, where they just approach SMEs on either a one-to-one basis, or where they look at a different type of product that's not actually focused maybe on the delivery of work. And so, through a lot of our data analytics and our partnerships, we have this view on the SME, which other players in the market might not have. And this allows us to offer better quality investment opportunities. And I think the platform itself is also always trying to, keep up with some of the trends in technology to make things more accessible and more flexible for investors.
Okay, thanks for summing that up nicely too. So I guess last question before we wrap up. So how can anyone interested to find out more get in touch, and what are the steps to get started?
Sure. So it's pretty simple. If you have more questions, you can reach out to us at ir@validus.sg, or, you can feel free to connect with myself or any of the other RMs in the team on LinkedIn. Alternatively, if you're comfortable to get started now, it takes under 10 minutes to go to validus.sg, our website, and to just register as an investor. And we'll reach out to you thereafter to see kind of what help you might need or if you have any further questions.
Thanks, Milena. So thanks everyone for joining us. This wasn't, this is meant to give everyone a bit of a context and quick understanding around alternative lending as a channel for investing in SME private credit, specifically for family offices. So if you have any more questions, which I'm sure many will have, definitely please reach out, like Milena has said. Also, or simply just visit validus.sg/invest to find out more too. Thanks, guys. Bye.
Thank you.